Welcome to Streetwise Live SAP, a podcast for the SAP community and IT leaders who want to control their roadmap, own their future, and make a significant impact for their organization, their teams, and their business partners. Streetwise Live SAP is a production of Rimini Street, the leading independent provider of unified global support and services for enterprise software. And now, today's episode.
Welcome to Streetwise Live SAP. I'm Scott Hayes.
And I'm Luiz Mariotto.
Let's get right to it. Luis, I'm really excited about today's episode. You know, this is our first episode with an invited guest. And so before I introduce our guest, I want to give everyone a little bit of background here. At Rimini Street, we've had a front row seat to IT software and strategy decisions being made by organizations of all sizes across industries and around the globe. And one of the most positive trends that we've seen across the board is the collaboration of IT leaders with finance leaders.
Yes, I agree with you, Scott. At the highest level is the CIO and the CFO working together to grow the business, increase the profits, and deliver the better products and services for their customers. I've been in the enterprise software space for over 2 decades, most of that at SAP. And I know that in the early days, the CFO who was signed the check, but didn't really have a seat at the table when doing technology evaluations or crafting IT strategy.
Exactly, but now we see CIOs and CFOs working together on these decisions. So, is it because large IT investments have moved from CapEx to OpEx? Could be. Is it because many projects have this ability to advance the business and they fall into that digital transformation category? Could be. So to get an insider's view to this, we've invited Michael Perica, CFO of Rimini Street, to join us here today. Now, before joining Rimini Street, Michael served as a CFO for companies in the energy sector and held leadership roles with various Wall Street investment banks. He's joining us today from his home office near Seattle, Washington. Welcome, Michael.
Hello, gentlemen. Great to see you and really appreciate the invitation and being on the show today.
Hey, welcome, Michael. Good to have you. Scott said that I could jump right in the first question, so here you go. How you experience the change in relationship of the CFO to the CIO?
So from a conceptual standpoint, moving very quickly away from how many dollars do I get, your classic bottom-up budgeting cycle, to how do I deploy and invest in technology as a strategic enabler of the business. Not just talking about keeping the trains running on time here. It's truly about innovation, bringing technology awareness to the executive table. And let's be clear, tech is moving so much faster than many CFOs, particularly your CFOs, I'll admit that, COOs and CEOs can keep up with. You know, we really depend on the CIO to know what's on the bleeding edge, the cutting edge, given all the options that we have out there. But it's really not about the shiny new object. It's really not just about the technology itself. It's about productivity, resilience, quality, customer and employee experience. And also, we can't say yes to all of it all at once. I don't know if anybody's P&L can support that. Together as a team, we have to discuss the innovations that make sense for the business, weigh your options, align the priorities accordingly. The successful CIO over the next 10 years will be thinking about business first, technology second.
Yeah, that's great, Michael. So you mentioned options, in fact, more than once, by the way. And, you know, I've heard you use the word optionality before, which I didn't know was a word, but I looked it up and it is. So 1 point for Gryffindor. Now, tell us why optionality is so important to you.
I do have a young daughter that's a Harry Potter fan, so that does resonate, Scott.
There you go.
Appreciate that. And there's really one word here, and we're talking about change. The world that we're living in today is certainly not the world we've lived in 5 years ago, or even much less 1 year ago. Moreover, a year from now, it's going to be different. And the last thing we should be doing, not just, from the finance perspective, is deploying our capital and technologies that would get us into partnerships that lock us up in something that's hard to change. Enterprise software vendors, though, I think they see the world a little differently. They want to make it difficult for us and or you to change out vendors. They work so hard to have low barriers to entry, but an extremely high barrier to exit. That gives me substantial pause. It always has. This is why I'm here at Rimini Street. Optionality. These are not simple, these structures. Sign up and pay monthly for your applications, your databases, etc. They're complex, highly customized, which is not a bad thing. It's right for your business. But the switching costs are so high, too high, and you typically find yourself so often get stuck paying more and more and more. Frankly, I've always had the approach, and it's no different in running your business and or if one has a supply chain. If you sense that a major technology vendor has an unhealthy, misaligned leverage over the business or particular leaders, it is in my obligation to our shareholders to find a way out. Need room to breathe. We need options. Need to keep those open. Partnerships are great. They deliver value, but when the partnership becomes a prison, and I feel like a prisoner, we have a problem. I have a problem. Moreover, when your roadmap from a technology perspective is misaligned to your business, but it's in line with the vendor, we have a substantial problem.
That is the topic of risk again. When you are working with the technology providers, Michael, what kind of things cause you risky radar to go off?
Well, sitting in this chair and being in the finance industry for decades and decades, the first sign is when you're handing over the economic keys to the vendor or a particular vendor. In the ERP space right now, we're seeing vendors push their customers from your perpetual, fully paid for own licenses to a subscription model. That's good for the vendor, great for investors, but it's not always the ideal position for the customer or client. Let's think about it. If you finished off paying your home, you own the asset outright, and then the bank comes and says, okay, hand the title over. Now I'm going to start charging you rent. Are you going to do that? It seems to be SAP/these large ERP vendor strategy. Now, recently publicly disclosed by the C-suite of SAP, they have 11 billion euros in support revenue, gleefully noting they're getting this from traditional licensed customers running really healthy, robust ECC, SAP, S4 HANA environments on-prem. However, they note gleefully that this conversion to their SaaS rental model from an ownership model can generate 2 to 3 times more revenue than their current support revenue. I'll ask you clearly, who's paying for that? Is this good for SAP, great for investors? What are the implications for the customers or client? Again, why I'm here at Rimini Street. I ran these environments. The second sign, of course, is when we begin to see a technology platform or product that's not delivering all its promises. There are a lot of promises, aren't there? A lot of great presentation and pitches. I like to keep those. When we're looking at a project, we're making evaluations that either a vendor had or the internal group making an evaluation on a project. And it's basically, okay, first and foremost, are we on time and on budget? Very critical, not easy to do in no uncertain terms. However, are we realizing all of the intended outcomes, efficiencies, and the gains that are in line with the business objectives?
So, Michael, another topic, AI. It seems to be the #1 topic now, right? Everybody's talking about AI. SAP has announced that new AI features they plan to release it for S4HANA, only available to clients running the cloud with the RISE or the Grow programs. What's your thoughts about AI and SAP strategy?
How much of a reality can a client or an enterprise gain through deploying a vendor's interpretation of AI? Is it really based on the business perspective or the vendor's perspective? Business processes are much broader, much deeper than any particular software package or department, region, etc. AI as well is so much more broad than any single software vendor can deliver. I'm encouraging, and I have a lot of these conversations at the C-level and the board level, to take an absolute holistic view in AI to the business, the entire enterprise. Frankly, AI feels finally an opportunity that can really bring the entire enterprise look and have an efficiency, and the closest I've seen in my entire career. But I wouldn't be narrowly focused on one interpretation embedded in what one vendor can offer through their lens. You need to bring it together. You should not be compartmentalizing AI if there's any message I could give on that front.
Thanks for that, Michael. Obviously, we have a similar position on that, and I do believe the vendors are doing some interesting things with AI, but I 100% agree with you that as business processes span, so should AI span software, span departments, and data, et cetera. So we're going to be encouraging our clients to take that approach. As we've seen, the most important component in AI is a client's data, which they already have. The rest of it is tools and business need to build around it, regardless of which vendor is running that particular database or piece of software. So, all right, we're going to wrap this up. These are pretty short episodes, Michael. No offense to you, of course.
No,
but as our guest today, you get the honors of giving us the bottom line. And there's only one rule. It has to be 3 bullets, exactly 3 bullets. Are you ready?
Absolutely, I'm ready. From the finance group, right? Bottom line, we can't think of anything more relevant than delivering bottom line. Number 1, maintain ownership. And with ownership, you retain control. Once you become a renter, the landlord sets the future prices. No rent control. I lived in New York City for 7 years. I understand the value of rent control. A lot of value there. Number 2, insist, if I can't stress this enough, on a business-driven technology strategy. As referenced earlier, right? The successful CIO partnership with the CFO over the next 10 years, it's business first. Work together at that C level. Think of the business first, utilize technology as an innovation. Number 3, as we just discussed, as you noticed, Scott, approach AI holistically. There's a gold mine of data. That data is your data. Keep it yours. Look at a meaningful use case. Get some great tools. Open source is a good option here as well. And get started now instead of waiting for the vendor that's going to ask you to allocate millions on replatforming with their own biased lens.
Excellent. Thanks, Michael. Nicely done. And thank you, Luis, of course, as always.
Thank you.
Now, for additional information on this topic, check out the show notes for links to those. And thanks for joining us. Hey, in our next episode, we're going to take a close look at the SAP skills gap in 2024. And spoiler alert, it is different than it was in 2023 for some very important reasons. You won't want to miss it. We'll see you there.
Check out additional episodes at riministreet.com/SAP Live.